This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Hello everybody, welcome back. We might as well make this one short and quick. It's Sunday, we're still waiting for Monday. Obviously Mondays, traditional markets, Forex, the whole lot. It's what we're waiting for. So basically I'm just recapping the same old rehashed TA for you, basically. I'm going to put it into a bullish spin because basically that's how I'm seeing this entire situation. I don't really see anything majorly, nothing to be massively concerned about when it comes to anything, to be honest. And I know that definitely feels counter to the way that everybody's talking at the moment. But until certain areas have been broken down from, there's no reason to be afraid of it. I'm not really, honestly, not scared at all. Remember, I've been talking about this for ages, and so it shouldn't come as any big surprise. But we'll be waiting for these areas on the Euro and the S&P, basically. But certainly the Euro to have a retest of this area. Guess what? We retested it, so we expect it to bounce. Again, rehashing the same TA that I always do. It is what it is. I'm sorry to say it. It's boring because I talk about it every day leading into the event. And by the time we get to the event, everybody's flipped massively bearish. But really, this is likely to be the end of this bearish move. We kind of move on from here. Doesn't have to happen, but I mean that is it. And the symmetry of all markets again, with the S&P coming down to a 200 simple moving average on the daily, with us, I suppose, a sizable buyback on this. You know, this sort of candle body formation usually predicts further move to the up. So again, you know, Euro, S&P look like they're ready to start bouncing next week. Again, appearances can be deceptive, but that's what it looks like to me. And so with Bitcoin, like I said yesterday, I'm bullish on this one, all at this area and at this area, and even back down into this area. I'm bullish on it because guess what? If you just zoom out a little bit further, let's just take it to a weekly. Really, I mean, what are we looking at? We come back down to any one of these areas. Still a series of high lows. There's your low, high, low, high, low, high, low, high, all the way up. It's really not a big deal. Anything going on in this weekly as well? Well, yeah, it looks like it's halfway up to like a bull market sort of run up, just like in 2019. That's the sort of vibe I'm seeing at the moment. Traditional markets seem to complement that as well. We're not overheated on here, no bearish divergence or anything like that, and we're about to cross over the 0 point on the MACD. And as you all know, or you probably know, is when that sort of momentum really starts to pick up pace with volume, that's where serious big moves are made. We can have a look just historically when these sort of things happen. So we crossed up over here, accumulation. We finally get ourselves above the 0 point, and then the later stage of this run takes place. That's kind of what we're looking for here. Now, I think I said, you know, there are things outside of this chart which can knock it back down. And even on the chart, I suppose, we have to respect that this is a double rejection on this 200 simple moving average. 200 weekly, it's a very important moving average. But once that's reclaimed, then the good times happen. While we're below it, we should expect to stay below it for the time being. But another run back up towards it, 25,000, that's fine. You know, I don't know if people talk about it. Like I say, I don't watch other people's channels. Why would I? But when it comes to the use of moving averages, the slope on the moving average counts for a fair bit. And if we zoom in, we can see that, yeah, okay, we're below a 200 weekly moving average, but it's still in an uptrend. This is the biggest lag of all, really. It's a 200 weekly moving average. It's basically been going up and up and up and up and up and up and up since its inception, really. It's going to be very difficult to see this bend down unless we spend an inordinate amount of time below it, which really we haven't in the grand scheme of things. And so while it's trending up, it's pointing to the direction it wants to go. It's also offering a higher areas of resistance. So if we do stay below it, over the next few weeks and months, this will still be higher and higher and higher. So the resistances will be higher. So it still does say, I want to, if we're going to retest that as a resistance, higher highs are still likely. And also, basically, you can't get massively bearish on it until it's got a negative slope, because that at that point says on the long term, we are basically going to be downtrending. That's what it basically says. It says on the long term, our resistances will be getting lower and lower and lower. And that will form a series of lower highs and lower lows and lower highs and lower lows until it basically goes down to 0. So we're not like that. That moving average is not doing that. It's pointing up. It says, this is where I'm going. Are you coming with me? I think it probably is. Again, you know, all major moving averages are pointing up on this weekly, so that's the direction that they want to go in. That's the direction price action is most likely to go in over a longer period of time. So don't get too bearish or pessimistic about the long term of Bitcoin or even traditional markets. I saw someone posted on the Telegram that there was all the, you know, all the big YouTubers, you know, the top TA YouTuber guys talking about economy and stuff like that. And yeah, I'm not an economist. I assume they're not economists either. And even the economists that go onto the TV, you know, they are economists and they all have conflicting ideas. Yeah, CPI had a bit of a higher read last time, but really, it's a lagging indicator. Even the CPI is a lagging indicator. You've got to give it all time to settle, and yeah, inflation is still high, all right, but it's not stopped markets, has it? I mean, even as the inflation was high in these areas, we still had serious big pumping runs. So now we've broken out of a bearish formation. CPI and inflation is lower than it was at any one of these. These were aggressive moves up in a bear market. We got those. Now, I still think that this is the end of the bear market. I actually think that this could be a significant low right now for the S&P. So, look, sometimes the whole situation when it comes to trading and investing is counterintuitive. Sometimes the best time to invest into anything for the long run is when everybody's talking about hard landings, crashes, recessions, stuff like that. If we just go back in time to this, I suppose, this is one good example, the March crash. People were super afraid. They thought that this is just the beginning. This is the beginning. Okay, what else have we got? 2008. Where are you? 2008. Again, I'm not an economist. I'm just reflecting on something for you here. Here we go. 2008 to 2009. This whole area was full of. This was all recessions. We had a giant bear market, collapse with the housing market, and then look, just as everybody was on their ass, you know, everybody, recession, austerity. Yeah, it was a problem that went on for years. But look at the state of this chart. I know that monetary policy was obviously different, stimulating the economy around that time. That's fine. It's all different. I'm just saying to you that charts are the only thing that I can go by. We look at the Chainlink Oracle Trueflation, then that chart still suggests that, you know, month on month, week by week, bit by bit, most of the time, the general vibe of inflation is still going down. Of course it is. There's a few things that are going to make it go up. If we start to see oil rise, natural gas rise, that's food and fuel basically. That's further problems with inflation. But, you know, we've got a handle on that because we can look at those charts. And at the moment, they're okay. Anyway, when it comes to this chart, I just rambled on for too long. I wouldn't worry too much about it. Like I say, I would consider all of this area as a buy the dip. Optimistic in the short term, but I'm pretty confident that this entire situation that we're looking at for all markets is going to end in the famous everything bounce, and this will be an everything bounce part 4. It's bullish until further notice. Right, I'm going to leave it with you there. As for pumping the algorithm, what's your favourite animal? I literally spend way too much time around kids from asking questions like this. See what mine is. It's definitely a monkey. Right, thanks for watching. Hope you have a nice day. Take it easy.